With global emerging markets again under pressure, India might seem an unlikely port in the storm. But with China's painful equity sell-off, India has found itself the happy recipient of investment searching for safety. With me down the line to discuss is Devendra Pant. Devendra, since the Chinese sell-off began on July 15th, the Shanghai index has dropped nearly 30%. Indian stocks, meanwhile, are up around 5%. Is India's boost really just a knee-jerk from China, or do you believe there are domestic elements helping as well?
Well, it's a mix of both. If you look at past 1.5 years or 2 years, there has been significant changes in Indian economy. Indian economy is still more a domestic demand-driven economy, and because of that, there is some impact of global developments, but more it is running on domestic demand. There has been some reform push, and what it has helped is when we are talking about all major global economies in the world are slowing down. Indian economy is moving upward, its growth is moving upward, though gradually. And that is one of the reasons why the international investors are looking at the Indian economy.
Analysts say we are in a bit of a sideways market, so anything small like China can help it pick up. But what investors really need to see over the next 6 to 9 months is good policy making. Now, there have been a few stumbling blocks in Modi's reforms. Do you think the government can deliver?
So the process will be gradual. Any investor, if it is looking at big bang and fast reforms, quick reforms like what happens in China, India, it is not going to happen. But any reform measure taken by any government is generally not reversed by the previous government, by the next government. To give you an example, if you look at the present government came in power and they had a big no for FDI in retail, but even after in the office for close to 1.5 years, the decision taken by the previous government still stands. So the reform process will be slow. But if we want to have the growth, sustained growth of the economy, there is no other option but for the government to undertake the reform process. Now, whether it's a gradual, ideally we would like to have a relatively faster growth, faster reform process, but even that gradually some reforms should be keep on taking place every month or so that at the, say, by end of the year or so, we'll have a different regime or the reform or the structural bottlenecks what Indian economy faced, they removed after a gap of, say, a couple of years.
The rupee has also been relatively stable, losing 1.6% against the dollar this year, outperformed in EM currencies only by the renminbi and the rebounding ruble, as well as the Taiwanese dollar. But do you have concerns for the currency amid the Fed expectations? What is your outlook for this pair?
Our expectation on the rupee, it is going to fluctuate within a band of 61 to 64 rupee per USD. And once the final decision on what kind of monetary tightening is taken by the US, the rupee will come back to some of its own strength based on how the economy is moving, what is the kind of capital inflows we are having, whether it's the debt-creating capital inflows or whether it is non-debt-creating inflows, increasing volatility, what central bank does, whether it wipes out foreign exchange from the market.
Devendra, thank you for your time and insights today. Lovely to speak with you. Well, that's all from me for the moment. Also today we have forecasts, press review and industry catch-up. So please do keep clicking back. Goodbye for now.